Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, I doubt that anyone here has forgotten that the NASDAQ 100 has given us a clear top signal 3 weeks ago. And since then, the U.S. market, the high techs notably, have definitely been in a bearish mode. A number of advisors and commentators are now proclaiming that it is getting time to be buying the dip. But I suspect that it is early times to do so right now. And of course, today's rather savage action may cause some of them to pull back on actually taking any buying action. Today has been the kind of day that puts dread into an investor's soul because, you see, they have all weekend to sweat it out and ponder. Why are they selling? And should I be selling too? And what do people know that I don't know? You may not recall what happened in 1987, but I remember very vividly what happened on Black Monday. People sold because others were selling, and there was carnage. Not that I'm suggesting that anything like that will happen this time around. For one thing, the markets now have built-in protective stabilizers to prevent that sort of runaway action from ever occurring again. But I can see where some holders of the FANG stocks, which are suffering, might be starting to get a bit nervous. Monday could be an interesting day. Now, it's still early times, but it's beginning to be time for us to start to think about opportunities to make trades in the FANGs. Now, I hope you heard me clearly. I did not say to invest, but to trade. There are 5 things that you need to be aware of. First, we only buy at breakpoints or as close as we can to them, basically buying on strong support. Second, I'm talking about trading, not investing. We are not planning to overstay our welcome. You will take your quick rebound, 12, 20%, and go. Third, of course I'm looking for the ultimate bottom, but I certainly do not expect to see one anytime soon. Fourth, the NASDAQ 100 index itself will offer some opportunities, but you have to be there, ready and able. Please use the NASDAQ chart that I gave you 3 weeks ago as your guide. Fifth, if you try for a trade and the breakpoint level does not want to hold, don't dither, just run. In these cases, the first loss often tends to be the smallest. Now, if the NASDAQ does fall to its next lower support level, its bubble price, or 7.4 times book, as it did in the 2021-22 correction, it means that the index will have fallen by close to 20%. And for some, that counts as a bear market. A good bounce should take place there, as it did the last time. Anyway, without further ado, let's take a close look at the FANGs for this week and see if there's any consensus as to a possible, even probable, trading rebound. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon. Well, you know, they came in with not bad numbers. Of course, they focused on their on their cloud business, or AWS business, which was doing wonderfully. But some of the other business was kind of soft. And today, the market not only set back, but Amazon dropped 10 points below its bubble price, triggering a potential sell. Alphabet, you'll see, by the way, that the bubble price breakpoint is now a little bit below the peak in that stock. And remember, even if we went back last week, you remember that the bubble price was actually above the peak. Well, that's on account of the fact that we have a new balance sheet in there, and it's pulled down the bubble price a little bit. Nonetheless, when we get a new balance sheet, I will tell you that the market will immediately respond to it and will pick it up without any question or challenge. Microsoft hit its HB2 12 times book perfectly and has been easing off ever since. I wouldn't be terribly surprised if we got down to its HB1 price. Remember, you might vaguely remember a long time ago, I was kind of looking for that as a possible bounce point. Never got there, but it might do it this time. There's enough left in the NASDAQ and the Microsoft that maybe we'll get there. Netflix is just been rolling over at its HB2, and again, you'll see we've got a new balance sheet here. That's the little red triangle. So it's pulled down the HB2 price. That's 12 times book. But all that means is that the company continues, the stock continues to simply roll over, heading a bit lower. Meta is a kind of, I don't know what I can possibly say. It's sort of a confounding company. Look what happened here. Yesterday, the stock pounded up beautifully right over its bubble price and was looking great. And today, it's pulled back down below. You know, I've shown you this chart a number of times. The bubble price has been a long-term high in the stock. The company has been the stock price has been trying to get over that level, because remember, the market has a memory. Been trying to get there, but so far it's been struggling to do so. The weakness in the NASDAQ isn't helping it today. Apple, actually, it's the only stock that's up today, as far as I can see, and only one of the FANGs. The market clearly likes its numbers, even though I have to say that the growth rate remains the pits as far as I'm concerned, but nonetheless, it is positive, and there is promise of interesting things to come as they apply AI to their new phones. So, as the best of a bad lot, I guess we just kind of hang in there and hope. By the way, one thing that I don't know, because you see I don't have that new balance sheet in there. You see a little triangle. Don't have that new triangle in there. That tells me I don't have the current balance sheet, and I really want to see whether Tim Cook is following through and buying back stock, because that will help hold the stock up. Tesla got whammed again today after clambering up mysteriously, in my estimation, to the HB2. Given what I see in the electric vehicle market, including, by the way, an announcement that BYD is planning to pile into Canada. Goodness, it can't be good for the competitive arena here. But so I'm not surprised that the stock A has set back, and B, it's had a tough day today. I don't think it's quite broken down yet, but below its HB1. My own target would be probably the bubble price, however. Finally, NVIDIA, here's the stock I absolutely love to hate. It's down again after, look at that, It popped right up to its HB7, okay, on the rally day, but it's pulling right back down again. I think that the HB6, or 33 times book value, would be my target, at least for a trade, although my own suspicion is longer term that the stock is still very, very expensive. So to briefly recap, what did happen last week? And more to the point, why? Well, Netflix and Google, or Alphabet rather, we've got new balance sheets, and Alphabet, thanks to share buybacks, so that's pulling down their respective structural valuation prices. Nonetheless, they continue to be on the weak side. Amazon, I guess it was more disappointing than I thought, and more disappointing than than management tried to get across to investors, and it has really been hit badly today. Apple is steady as she goes. But once again, I keep saying 5% revenue growth does not leap out at you as a call for urgency. However, share buybacks and a promising AI application may hold the stock up here. Poor Microsoft is, I guess I can best describe it as kind of dragging butt. It's just oozing on downwards, and I think it has a good shot at getting to its HB1 or 9.5 times book. Would be a great place, I think, to take a position here. NVIDIA, well, it's breaking down as far as I'm concerned, and it's got a long way to go, but we might get a nice rebound here, as I just showed you. Finally, Apple, nothing fancy schmancy. I need the Apple balance sheet to see if Tim Cook was sandbagging or whether he is actually buying back lots of stock, but it's holding nicely. So downside targets for this quarter, my surmise, my guess, if the NASDAQ 100 declines to its next breakpoint, its own bubble price, which I hope you have noted from 3 weeks ago, okay, that would be, I think, an excellent place to look for a good rebound. Amazon, my target had been the bubble price, but that's failed. So we're now in kind of new downside territory. As far as Alphabet's concerned, I think the MSG price may be a little bit far, but that would be a good place for an excellent rebound. And Microsoft, my HB1. Netflix, I'm looking for the HB1. That's 9.5 times book. NVIDIA's got a long way to go, I think. Meta remains the big conundrum in my life. It doesn't know whether to fish or cut bait, and so it's just hanging around its bubble price. Okay, anyway, there's two kinds of trading opportunities. The first comes when a stock reaches a good breakpoint, preferably one that has caused the shares to turn before. The second occurs when the overall market supports your decision. I myself prefer the second opportunity. Now, if the FANGs are failing and you do not want to try your hand at trading the breakpoints, are there any alternative investments that you could consider? To answer that in part, it is not only the NASDAQ that you need to follow, but the S&P and the TSX as well. Now, I go over all the markets during our regular weekly client webinars. So again, if you are not a client but want to join our investing family, go to www.strategicanalysis.ca/pricing and join today. Of all the times that you will benefit from taking the SVA service, this is likely to be the most urgent and important of all, I think, as you are seeing vividly right now. Anyway, that's all for this week. And so for now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. And as you have now experienced at first hand, the SVA valuation of the overall market is a very powerful tool indeed. I'll see you next week.